I had a few people ask me, what am I looking at when I'm looking at a deal to invest in? Multifamily real estate. So all of you guys know when I'm talking about real estate investing, I'm talking about multifamily real estate. So it was a simple thing for me, but I figured I'd do this video so that way it helps you guys, right? At least to be whether you're going to invest on your own or whether you're thinking about investing with us over at Bell Capital, great. But this was the thing that I wanted to share. And this is what I look at every time. Like if you know me, you've heard me, you've been around me, you've come to our events at my office, this is the same thing. So number one thing I'm looking for always is the location. Number one, the location has to be sick. The reason why is because even if you invest in a multifamily deal, you're not really investing in the property, you're investing in the location. You can always change the building, you can change the landscape and the palm trees, parking lots, the gate, the name of the complex, whatever it is that you got, but you can never change that location. So whenever you buy or you're investing money, you're always looking at the location. That's what I look at. Number two, the size, or you could say scale. The size of the number of units is the most important number in all of real estate, right? That is where the money is made. The more tenants, the more residents that you have, the more valuable that property is going to be over time. Especially when I'm looking at the stuff we look at, institutional quality assets. Institutions ultimately look at the best locations and the scale, which is the number of units. That's probably more important than anything else when you're talking about an institutional quality deal. And that's what I'm looking at. So I'm always looking at how many units is it first. And if it's not enough units, I won't even go look. Next, three, I'm looking at cash flow. Boom. Money. Does it cash flow? I don't even look at a deal unless I think it can cash flow. I don't look at development deals. We don't look at and I don't look at other types of multifamily. Like there's other multifamily housing like senior and student. I don't look at senior and student. We look at market rate deals, but I'm always looking like how much money is this thing making? Is it full? Is it 97% occupied, 90%, 90%, 95? All of that stuff is important to me because if it's not going to cash flow, meaning like it's not making money, it's not going to cover the debt, and whatever's left over is the cash flow, it doesn't make sense. So it has to be full at some point, right? Next, what is the upside of the deal? Biggest upside for me is can the rents go up? Always. I'm like, dude, do I think over time the rents are going to go up? I believe that the United States is going to become a renter nation, period. There's 70 plus million baby boomers and 70 million millennials all moving towards rent, right? And we know that. We rent, we Uber when we go places. If I have a birthday party for my kids, I'm not going to go buy a bunch of 6 foot tables. I'm going to rent, right? We rent where we live. We rent cars. We do all this stuff. All the stuff that wasn't available in the past is now here. So that I know that I believe 100% rent in the United States is going to continue to be a thing. Housing, rent. I'm always thinking, can the what is the upside of the deal? Can we raise the rent or raise the income of the building? Next, that's number four. Number five, debt. Can we get debt? Good debt. Could we get good leverage on this property? Does the bank even want to lend on us? Fannie Mae, Freddie, life insurance companies, a debt fund, local banks, regional banks. Who's that? Your debt is your first partner. So if a bank doesn't want it, a lender doesn't want to do it, a commercial broker, lender can't say, yeah, we love the deal. I don't even bother. So I definitely look at that. And number six, I'll write this here, is what is the downside? I'm always playing what the downside is. Boom. What can happen and how can I fix it? What's the downside? Well, the property our competition next door could sell. There may be a land assembly coming, or maybe there's a city thing that's going on that's going to like block off all the entrances to this specific property, the road where that goes in and out, and that's going to be a 3 year long project. Like I need to know that going in the door that this is possible. So when I'm looking at a deal, what's the downside? Well, aside from hurricanes, depending on where you live at, or earthquakes and tornadoes and twisters, aside from all that, because that could be covered by insurance and fires, what doesn't happen that I need to know about that will affect the cash flow of this property, period, or the upside of this property in the future? Because if you can't turn into the property or turn out of it, and it's going to take 3 years, I'm going to get people that have to leave. And I need to know what that looks like. And then the last, and the reason why this part's important, the downside, because which is the other thing that I look at, and you guys, especially any videos I make on this one all the time, was that seven? So that's seven, I think. Yeah, seven. The exits. And that's exits with an S. I need to know how we're going to get our money out of the deal. Because if we're going to invest money in the deal, the goal is to get the property, hold the property to protect our money, make money while we wait, and then exit the deal. And I tend to focus on a couple of things. I'm like, okay, I'm gonna refi, cash out. I'm gonna refi with no cash out. I'm gonna lower my rate. That's possible because rates are high right now. If we go get a deal right now and the rates are 5.75, 5, maybe over time, if they drop back down to to 4.5, sub 4, I want to be able to capitalize on that, even if I don't take any money out, right? And I could sell it, which is the worst way to get your money out. But because if you sell, you got to start it all over again. Now you work really hard to go through these other steps. Now you got a deal. Now you got to get your money out. But selling it to get your money out, you have to redo it all over again, right? So I don't like this thought, but it's there. And then I can bundle it. I can bundle this up with, let's say I have 1,000 units, right? Each one of these things is, let's say, 250 units each. I can take 4 properties, bundle them all up, and sell them at a premium to like Blackstone, BlackRock, some other institution or some insurance company or something like that, Goldman Sachs, because they can't buy a small amount of properties at one time. They got to buy a lot of deals at one time. So this is the other way to be able to do that. There's other ways to do this, but I'm always looking at every deal like, hey, can we refinance this thing later? Can we pull our money out? Can we refinance and just lower the rate and our cash flow shoots up? Will our investors be happy with that? If I had to sell it, would it be smart to sell? And you guys watch any of my trainings, I talk about all the time. There's always a time to think about selling. There was times when I refinanced our deal and then refinance cashed out. And then later I was like, hey, we have enough equity in this property, even though we have no more money in the deal, the equity in the deal without our money in it could actually make us more money if we rolled it, if we just sold and rolled into another deal. So that's another way to think about that. And then bundle it, which I did that too. We took a couple of properties and put them on one spreadsheet, brought them to market, and got a premium offer for all of it. Now, when we did that, we just went right back in and refinanced because we're like, hey, we have proof that the market is willing to take all 3 of our assets. And now that we have this value, we want to refinance. And the bank took that. They took that. And it says, ooh, because they get excited about that too. Why? Like I said, you can't get a deal that the bank doesn't want. You got to be able to get good debt. If they don't want it, you don't want it. They have to consistently want these deals. So these are the 7 things that I look at when I'm investing in a deal or thinking about investing in a deal. Like next week, I'm going to go take a look at an asset. I'm not a fan of the location. I'm going to go because I want to keep building the relationship that I have with this broker because naturally, you standing in front of people, you are real to them. You're a real person. And I've met them, great person. I want to do deals with them. I'm going to do a lot of deals with them, but I'm not a fan of the location. Remember, guys, investing in real estate is a sales game. So you have to constantly sell yourself. You got to show up all the time to this game. Size is great. Cash flow is actually excellent. Upside is great. The debt, yeah, they want to do it. The downside, I don't like the location. I don't know what the location is going to be. It's a harder sell for me to go back to my investors and go, yeah, we're going to be in Riverside instead of downtown San Diego or in San Diego. Like, that's a harder thought for me because I'm not sold on the location. Remember I said it's a sales game. You got to be sold. But last but not least, even in that deal, could we exit the deal? Absolutely. Somebody will want it. Could we do a cash out refi later if we got the deal? Yeah, of course. The rates are going to come down. Could we sell it? Yes. It's an institutional quality deal now. They're selling it. They're coming to market. But do I want to be in that seat 7 to 10 years later? I don't know. And here's the other thing. If I got a deal in that market, I would have to go and get more units in that market to cut my costs down for my expenses, management, maintenance, cost, repairs, all that other stuff. It would all have to work together. So therefore, there's a couple of things on this list, and I'm like, do I want to deal with that? There's more deals out there. But like I said, to build a relationship, I go. But these are the things I think through. So when you're thinking about either investing in a deal or you're investing with a guy like me, These are the things that I'm talking about all the time. When I'm looking at a deal, I'm siphoning. I'm like talking to my team, talking to my people, talking to the mortgage person, talking to my brokers. I'm asking these questions over and over and over again. So I understand, is this what I want when I'm thinking through a deal? And if I can't check off all these boxes the best I can, like I said, because they all work together, they're not individual, then I'm probably going to say no. Just so you guys know that. So if you're doing this, count that out in your mind. Is it the locate? Is it the location? Do you love the location? Because you can't change the location no matter what happens. The size has to be good. It has to make money when you buy it. There has to be some upside. You don't want to just buy something and it ain't gonna go up. You have to be able to get good financing or debt on a good leverage. You can mitigate or lower the downside. What is that? Right? You got to know what the downside is. Or at least know that there's a downside and decide, just like I have to do. I'm like, well, let's say I get no cash flow on this deal. Let's say we're at break even for 2 years. Do I even still want this asset in my portfolio? And will my investors be okay with that thought? Right? Hey, we're not going to get money. Like that doesn't mean it's going to happen, but you need to have that in your underwriting in your head based on your decisions when you start going into these type of deals. This is a long-term investment when you're investing in multifamily assets. And then last but not least, what are your exits? Multiple. You got to have, like mine have one, two, three, four, and trust me, there's more. I have a bunch of different ways to do it, but this is when I'm thinking through my initial stuff. I start counting checking boxes in my mind. Hey, yeah, I like this. No, I like this. Someone on my team, I start asking questions and bringing this up so that we were all thinking with the same information. But I simplified it for this video, but I wanted to share that with you guys. So if you guys talk to me or you're looking at your own deals, this is what I'm thinking about when I'm doing them. All right. So I hope this helps you guys. Circle back, watch this. I went through this pretty quickly, but I wanted to get this out to you today. So yeah. If you need anything, let me know. Leave a comment. Or if you have questions, leave them in the comments. I'll make sure to get back to them. Or if you have something that you want me to make a training or video on, or you got questions that I can help you with, put them in the comments there. I'm there. Subscribe to the channel, like this, like the video, give it a thumbs up. I would appreciate that. I want to get more people noticing what I'm doing because I can tell you this stuff is gold. If somebody had actually taught me this when I got started, I would already have billions of dollars worth of real estate. Even though I'm heading there now, I would have this stuff done because even though this is simple, that's why I like this stuff because it is simple. It is the most sophisticated investment vehicle you can have, but it's simple enough for the everyday investor like myself, like you, we can get involved and we can actually create wealth for ourselves and our families. So yeah, well, I'll talk to you guys soon. Let me know if you need anything. Let's get after it. Boom.